Hello and welcome to My Finance Teacher YouTube channel. Let's have a look at gold again today, and today is 17th of January 2017. As I mentioned in my previous video, and you will see a link on the screen, we're at the moment approaching a few resistance levels, which means that in the short term price might drop a little bit. However, there is no need to panic. In the intermediate term, the tendency for the price is going to be to go up. So let's have a look at those resistance levels. In front of you, you see a daily chart of gold price, and the blue line is the 10-day moving average, whereas the red line is the 50-day moving average. You see that we are now rather considerably higher than the 10-day moving average, so we're a little bit stretched upwards. Additionally, we're approaching this 50-day moving average from below, and this line might turn to be a resistance level. Besides that, if we look at the previous intermediate cycles declining stage, over the declining stage of the previous intermediate cycle, the price has decreased from around 1380 to around 1140. And by now we have retraced about 38% of this decline. So the decline has been this much, and we've retraced around 38% of this decline. The price on the chart has not been updated yet, but we are now at the moment, the prices at the moment are around 1214 per ounce of gold. Now 38% is the 38% Fibonacci retracement levels, and these numbers are often, not always, they are often either resistance or support levels depending on which direction the price is approaching from, and we are now approaching from the bottom, so this 38% Fibonacci level might turn out to be a resistance level, meaning that price might bounce off it back down for a short while. Another indicator pointing to a potential decrease of gold price over the next short term is the RSI, which is at the moment at overbought levels, and we see that whenever the RSI reaches these overbought levels, the tendency is for the price to decrease. We see it happening here, here, and here. Those three declines happened during the advancing stage of the intermediate cycle, so they were not long-lived. And what happened in November last year, as the RSI reached overbought levels, the decline in the gold price has been quite significant. That's because we were at the declining stage of the intermediate cycle, so the general tendency for the price was to move down. However, even with potential decrease in the gold price over the short term, as I mentioned, there is no need to panic. Over the medium term, the picture is better. RSI is only now approaching the neutral levels, so there is a potential for the price to keep increasing, even if we see a red candle for this week. After that, for the next few weeks or a couple of months, I expect the price to continue to increase. Besides that, we are considerably lower than this 50-week moving average, which is the red line, which means the price has been stretched too far down compared to its recent performance levels. So there will be a tendency for the price to go back to its recent averages due to mean reversion. Besides that, if we have a look at what's happening to US dollar, this is the US dollar index. Dollar generally follows cycles that last for about a year or so. The previous cycle was rather shorter than a year. The one before that was longer, as far as I remember. And we have been in this advancing stage of this dollar intermediate cycle for considerably more than half a year already, and it's time for dollar to enter its declining stage. And as we see over the last few days, dollar has lost some value, which might indicate that the dollar has indeed entered the declining stage of its cycle. If that is true, if dollar is losing value, that is going to help gold to maintain this tendency to increase in price. So I hope that has been interesting for you. If that has, subscribe to our channel and good luck.